Hey there. So you've probably heard about cryptocurrency, maybe from a friend, on the news, or from that one guy who won't stop talking about Bitcoin. But what is it really? How does it work? Is it safe? And should you even bother? Today, I'm breaking down cryptocurrency in a plain and simple language. Just the basics you need to understand what's going on in this fast-moving digital world. Back in 2008, during the height of the global financial crisis, trust in traditional financial systems was shaken. Banks were collapsing, people were losing their savings, and the world economy was worsening. In the middle of all that chaos, a mysterious person, or group using the name Satoshi Nakamoto, released a white paper that introduced a revolutionary idea, Bitcoin. The idea? A digital form of money that didn't rely on banks, governments, or middlemen. Just pure, peer-to-peer value exchange. In 2009, Bitcoin was launched, and in 2010, someone famously used 10,000 Bitcoin to buy 2 pizzas. That would be worth hundreds of millions today. Since then, thousands of cryptocurrencies have been created, like Ethereum, Solana, and Dogecoin, each with its own purpose and potential. Now, cryptocurrency has become a global conversation. But for many beginners, it still feels like a complex mystery full of weird terms and risky moves. So let's break it down. Section 1. What is cryptocurrency? Cryptocurrency is basically digital money. But it's not like the money in your bank account, even though that's technically digital too. What makes cryptocurrency different is how it's created, stored, and transferred. Unlike regular money, crypto isn't printed by governments or controlled by central banks. Instead, it's created through a process called mining, in the case of Bitcoin, or other mechanisms like staking or minting for different coins. It's all powered by technology, specifically, a network of computers around the world that keep everything running. Some of the most popular cryptocurrencies include Bitcoin, BTC, the original and most well-known cryptocurrency. Ethereum, ETH, not just a currency, but also a platform for building decentralized apps. Solana, SOL, known for fast transactions and low fees. Stablecoins, like USDT and USDC, tied to real-world currencies like the US dollar to reduce price volatility. One of the key features of crypto is that it's decentralized. That means no single company, government, or bank is in charge. The system runs on open-source software, and anyone can participate. You don't need permission to create a wallet or make a transaction, just an internet connection. Section 2. How it works. At the heart of cryptocurrency is a technology called blockchain. Think of it as a digital notebook, one that's open for everyone to read, but almost impossible to tamper with. Every time someone sends or receives crypto, the transaction is recorded in a digital block. Once the block is filled with transactions, it gets added to a chain of earlier blocks. That's why it's called a blockchain. And since every block links to the one before it, it creates a secure and transparent record of every single transaction ever made on the network. To use cryptocurrency, you need something called a digital wallet. This is kind of like a bank app, but for crypto. Your wallet stores your crypto and allows you to send and receive coins. With a wallet, you can buy crypto using your local currency, like dollars, naira, euros, etc. Send crypto to friends, family, or anyone across the world. Spend crypto on goods and services, in places that accept it. Store crypto securely. And here's the cool part, since crypto works peer-to-peer, you don't need a bank or payment processor to approve your transaction. Your wallet talks directly to the network. Section 3. The risks and rewards. Let's keep it real, cryptocurrency is exciting, but it's also risky. For every success story, there's someone who lost money. So before you jump in, let's talk about both sides. The rewards. High potential returns. Crypto prices can rise dramatically. People who bought Bitcoin or Ethereum early made life-changing gains. Fast global payments. Sending money across borders with crypto is quick, easy, and often cheaper than using traditional banks. Financial freedom. You control your money. There are no banks to freeze your funds or delay your transfers. Innovation. Crypto isn't just money, It powers smart contracts, decentralized finance, DeFi, NFTs, and more. The risks. Volatility. Prices can crash just as fast as they rise. One tweet from a celebrity or a news headline can move the market drastically. Scams. The crypto space is full of fake coins, phishing websites, and sketchy projects. If it sounds too good to be true, it probably is. No safety net. If you lose access to your wallet or send money to the wrong address, there's no customer support to help you. It's gone. Regulatory uncertainty. Some countries are still figuring out how to handle crypto. Rules can change fast and affect prices or access. So while crypto offers a lot of promise, it's not a guaranteed path to riches. It's an evolving space that rewards those who take the time to learn. Section 4. How you can get started safely. Now that you understand what crypto is and how it works, let's talk about how to get started safely. Step 1. Educate yourself. Don't invest in anything you don't understand. Watch videos, read guides, follow trusted content creators, and join online communities. The more you learn, the better decisions you'll make. Step 2. Choose a trusted exchange. To buy crypto, you'll need to use a cryptocurrency exchange, a platform where you can trade regular money for crypto. Some of the most popular and trusted ones include Coinbase, Binance, Kraken. Your local exchange, make sure it's regulated and has good reviews. Create an account, verify your identity, and link your payment method. Step 3. Start small. You don't need a lot of money to begin. You can start with as little as $10, or the equivalent in your local currency. This helps you get familiar with how things work without taking on big risks. Step 4. Get a wallet. While most exchanges offer built-in wallets, it's safer to move your crypto to a personal wallet you control. Options include mobile wallets like Trust Wallet or MetaMask. Hardware wallets like Ledger or Trezor for offline storage, great for long-term holding. Step 5. Protect yourself. Crypto security is your responsibility. Here are a few key rules. Never share your private keys or wallet passwords. Avoid clicking on suspicious links or messages promising free crypto. Use strong passwords and enable two-factor authentication. Keep your recovery phrases written down and stored offline in a safe place. Remember, in crypto, you are your own bank. That means you get full control, but also full responsibility. Wrapping up. Crypto is not magic internet money. It's a new form of technology that's still growing and evolving. And like any major innovation, it brings both opportunities and challenges. So if this video helped you, be sure to like, subscribe, and drop a comment. Thanks so much for watching, and remember, you don't need to be rich to start investing. You just need to start.